and what are the priorities of the SSM for this year and going forward?
Thank you very much for the question. And let me say a little word up front that I'm really glad to be here in Greece. It's my standard country visit as the supervisor for European banks, and I'm really glad to be here and see also the progress that has been made. And this is, I think, one of the foundations generally, not for our work only in Greece, but also generally in Europe, that we have really improved a lot in terms of common supervision in Europe. The resilience of the banking sector has increased in Europe, but also in Greece. But of course, and this is what you're pointing to with your question on priorities, there's risks that lie ahead that we have to deal with. So one of our priorities is to make sure that the banks are prepared for the new macro financial environment, that they're prepared to deal with geopolitical risks, which have certainly increased. So that's priority number one. The second priority is that we very often see shortcomings in, let's say, the risk management, the governance of banks. And here again, I'm not just talking about Greek banks, but generally in the banking sector. So we want to make sure that we are even more effective in making sure that the banks remediate these findings that we have and that they really improve. And then the third priority is digitalization is really changing not only the real economy but also the financial sector. So we want to make sure that the banks are well prepared, that they have digitalization strategies, and that they're also protected against the risks that are related to that. So cyber resilience is very important, and of course sound IT infrastructures are extremely important for the banks. So these are the three areas that we focus upon.
The SSM has always been positive about cross-border mergers, but we see some resistance at the national level. What do you think about this situation, especially when we need deeper capital markets in order to support the competitiveness of the European economy?
Mm-hmm. Yeah, I mean, actually the issue about mergers, cross-border mergers, this is very much related to what I just said, namely that we see digitalization in the financial sector, and of course all the institutions have to consider how to respond, and merging either domestically or cross-border can be one of these responses to generate scale, to diversify activities. So this is certainly the positive aspect of merger activity and cross-border merger activity. But at the same time, of course, there's also risk. So bigger institutions need to be managed. There's execution risks if you have to integrate IT systems. So this is where we come in, where we look at the effects of mergers in terms of the prudential implications. So if you want the implications for the safety and soundness of the banks. And we have very clear criteria how we look at that. So we don't really differentiate between the domestic mergers or cross-border mergers, but we have the same criteria that apply for all, and this is all also publicly available. So we have a very clear mandate here how we look at these things, and our mandate is not directly to look at the competitiveness of the banks. We need to keep banks sound and stable, but of course everything we do to make sure banks have sustainable business models, they're well capitalized, that also helps them to compete better on international markets. So there's clearly an impact of what we do. More resilient banks are also better able to compete in the end.
A very important factor in the euro area is the green transition, climate change, and the climate risks for banks. Does the new US agenda in the green transition change the facts about the ECB's policy?
The very short answer, no, because I mean the truth is that climate and environmental risks are real, and they're not dependent on policy decisions taken globally. So I don't want to comment on what policy decisions are being taken, because we are not policy makers, we are rather policy takers, if you want. So climate-related risks are real, and who would know better than the Greek society, because you had the tragic events around the wildfires with implications going way beyond, of course, the banking sector. But we need to make sure that banks are prepared, that they have a good risk management in place to understand climate and environmental related risks. And I must say we've actually made quite a bit of progress with the industry, starting from stress testing, vulnerabilities analysis, then also giving supervisory expectations, what should good risk management in this area look like. And many banks have made significant improvements. So not all, we are not fully there yet. There's always issues that we find, but I'm quite confident that we are on the right way and that we're also changing the risk management in the financial sector, in the banking sector in particular.
Given the time lag in the impact of rising interest rates, do you expect an increase in non-performing loans, or do you feel confident that we might avoid such a situation?
Yeah. Well, we monitor that very closely. So, I mean, the first impact that you've seen of higher interest rates is, of course, that bank profitability has increased. So you see this across the euro area countries, including, of course, for the Greek banks. And then we monitored very carefully. So how long does it take until the full impact of interest rates is reflected, of high interest rates is reflected on balance sheets? The technical terms, the transmission of interest rates is very different across countries. It depends also on the contractual arrangements, whether you have fixed rate loans or variable rate loans. So we monitor this closely, and so far the banking sector has been dealing with this higher interest rates quite well, one must say. But of course, I mean, it's a little bit also in your question, we need to be very vigilant. It's not only high interest rates, but it's also a lot of structural change in the real economy that is happening as we speak in Europe. So we need to really pay attention to non-performing loans and that they don't build up over time. So far, we're seeing we do have higher corporate insolvencies in some countries. We do not see a significant increase in non-performing loans. It's relatively isolated in commercial real estate, some parts of Europe, lending to small and mid-sized companies. But we clearly pay very close attention because we started our work in the banking union starting from very high level of non-performing loans. We brought them down, so we certainly don't want to stay in an environment where non-performing loans are contained.
You referred to the Greek banking system. I would like to tell me what are the main challenges and priorities from this time and in the future, near future.
Yeah. Well, first of all, what I just mentioned, this was a very painful experience, of course, for the Greek banking sector, having very high non-performing loans, which had severe negative implications for the sector to function. It took a lot of effort of everybody who was involved to reduce these non-performing loans, to increase the quality of capital, and I think one cannot often enough repeat also the progress that has been made here, and I'm really grateful for everybody who has supported this, both the authorities and of course also the people in the banks that have been working on this. So the Greek banking sector is now in a much better position than it used to be. The progress has been really very good. Of course, I mean, we need to remain vigilant like elsewhere in Europe. So I think here the Greek banks are not that much different from banks elsewhere. All the risks that I've mentioned, geopolitical, the new macro-financial environment, digitalization, these are challenges for banks across Europe. So this is why we're really working very closely, of course, also with the Greek banks in the context of our priorities.
Would you see positively the possibility the Greek banks to give higher dividends to the shareholders compared to last year?
Mm-hmm. Well, I mean, this is first and foremost, of course, the decision of the management of the banks, and they have to also carefully assess what is needed, where do they need to build resilience, financial resilience, operational resilience. Investment into IT is very important. So we, of course, work with the banks. We also have our supervisory expectations, where we basically also ask the banks to have a medium-term capital planning. And since profitability has increased, as we've mentioned earlier, now the banks for the first time are also able to pay out, and I can fully understand that the shareholders are also appreciating that, and it needs to be seen. I think it's what is always important, what is always our priority, is a very prudent payout policy, that is not driven by the interest of short-term optimization, but really in the medium term making sure that there's a consistent, prudent payout policy, taking into account what is needed in terms of investment in the bank, but also what is needed in order also to satisfy shareholder expectations, and this is where we are currently.